Despite Bitcoin falling more than 13% on that day, Thursday or Friday, again, depending on your time zone, Park stressed that the ETF flows defied historical patterns. So instead of seeing heavy redemptions, IBIT, which of course is the biggest ETF issuer in the US, recorded roughly 6 million new shares created, which translates to more than $230 million in added assets under management. Welcome back to another episode of The Weekly. It is February 9th, and Bitcoin trading just above $70,000 after crashing, of course, on Thursday or Friday, depending on your time zone, to as low as $62,000. So decent bounce here. But David, what we're going to try to cover here in the first part of The Weekly is what actually happened. Why did Bitcoin crash? Obviously, it's not just one reason, but perhaps this one-day crash, which was one of the biggest ever in Bitcoin's history, has some specific structural reasons beyond just like the long-term narrative reasons for why Bitcoin has been selling off for the last few months. What happened on this specific crash? That's what we're going to try to cover here. All right, let's get into it. So there's a few different theories going around, right, as to what caused this like particularly sharp sell-off. One of them is from Jeff Park, who is the chief investment officer at ProCap, very intelligent market analyst, Jeff Park. Now, he's saying that Bitcoin fell mainly because of TradFi sort of automated decisions, right, relating to like some big funds or whatever needing to basically algorithmically selling off, right? This is a story that you often hear, I think, in these types of events. Something triggers and it snowballs, right? So interestingly, he says that despite Bitcoin falling more than 13% on that day, Thursday or Friday, again, depending on your time zone, Park stressed that the ETF flows defied historical patterns. So instead of seeing heavy redemptions, IBIT, which of course is the biggest ETF issuer in the US, recorded roughly 6 million new shares created, which translates to more than $230 million in added assets under management. So this perhaps counterintuitive outcome suggests that the selling pressure, according to Park, came largely from hedged market neutral strategies rather than outright exits. So he says, quote, the sell-off did not result in end outflows of Bitcoin assets. More, he's concluding that the activity was dominated by dealers and market makers operating within the, quote, paper money complex.
Yeah. So there's a lot of theories and people pointing to many different things for this crash. The most obvious ones, of course, were Warsh's appointment or announcement last week as the new Fed chair in May.
This is pointed to as a trigger.
Yeah, that triggered basically not just crypto, but everything. And you saw a sell-off start in tech, and then that tech sell-off broadened, and crypto got swept up into that, obviously, Bitcoin and crypto. So that's probably the proximate cause for this like local most recent sell-off. And then there's like some, as you're alluding to, particular things with the crypto setup that people were pointing at. Arthur Hayes, he also was looking at IBIT in particular, but ETFs in general. And so there seems to be something there. As many folks noted, IBIT had the highest volume day ever by a factor of nearly 2x. So something definitely was happening. We don't know exactly what. There are other theories too, yet still that there was a Hong Kong fund that got liquidated, and their Bitcoin exposure was via BlackRock's IBIT ETF. So that's also kind of being rumored to have happened. Nobody knows right now, and I obviously in the next week or so we'll start to get a clearer picture of this. But it does seem relatively. It seems likely that IBIT in particular, but maybe these spot Bitcoin ETFs in general, are connected to that kind of gap down that you saw on Thursday.
Right. And then there's another group of people who have been pointing out or claiming that what's actually happening here is due to the financialization of Bitcoin. You've got more claims on Bitcoin than actual Bitcoin exists. So there's this one guy, Nobler, he's pointing out, and this was reposted by someone that you respect, David, I believe.
Several people
Anyway,
did.
Several people.
Jim
So
Bianco,
this
I
isn't
think,
just a
did, and-
yeah. So normally, like I'd never heard of this guy, but when it's reposted by sort of heavy hitters, you pay attention. So anyway, this guy's pointing out something which to me seems a little conspiratorial, but who knows? Basically, he's saying one real BTC can now simultaneously back an ETF share, a futures contract, a perpetual swap, an options delta, a broker loan, a structured note, all at the same time. So that's 6 claims on one Bitcoin. And this sort of financial wizardry causes these kind of flush outs at times. And people have pointed to this rehypothecation, I guess, as being a reason that gold has for years underperformed because there's just like so many paper claims on it, and then eventually, the piper, what's the expression? Eventually the rooster, I don't know, man. The rooster comes home to like roost or whatever it is, and you get like a short squeeze, and then you see what happened in gold, right? Like suddenly, like everyone realizes that there's no people don't have the underlying, and they have to cover. But
this is also part of the silver conspiracy. If you're a silver bug, they also talk about the paper markets being somehow behind the what's it called, the dampening of price appreciation for silver. So I don't know how true this is, but yeah, Jim Bianco reposted this, who I definitely respect, and he's a TradFi guy. So there probably is some merit to this. The other question though is kind of like, isn't this inevitable? As something becomes valuable, they're going to have derivatives on that thing, right? I feel like that's just kind of an unavoidable way that valuable things, I guess, get co-opted, or a paper market will always kind of eventually form over anything that has value. So, in the comments to this, there were a lot of people saying like, yeah, that's why I sold all my Bitcoin years ago for whatever. They say something that doesn't have derivatives like this on it. It's just like, so then, but then at any point, can't anything else develop a derivatives market around it? So I don't know if there is any answer to this.
Right. Some people also claim, there's a bit of a tangent here, but claim that because of the way Bitcoin works, it's much easier to actually take physical delivery compared to, let's say, gold. So that will make this type of paper claims on Bitcoin market, these derivative markets, unwind much more quickly.
Yeah, and that makes sense. That makes a lot of sense to me. Yeah, obviously most gold is not going to be actually exchanged. And there have been some pretty cool, on a tangent, there's been some pretty cool podcasts I've listened to of people who have been talking about how silver and gold, the physical nature of the delivery has caused all kinds of weird like subcurrents in price in the past couple of weeks. And that's just because you can trade the kind of the paper gold amount online, right? Like milliseconds. And then that has effects that take 1-2 weeks to actually come about when you have to move the gold.
All right. So anything else to note on why we had this particularly violent crash?
I would just say that, again, this just seems like it's led by broader macroeconomic instability, right? So I think if the equities and other markets kind of stabilize, then I don't see any reason why crypto wouldn't also stabilize. But if like, for example, this stuff with Iran blows up, gets worse, and that causes weakness in traditional markets, then crypto's probably going to go have another leg down. So
Okay.
I think that's kind of how it works.
End of the day, probably it's just a result of the broader macro and geopolitical forces. There may be some nuances in the particular market structure for Bitcoin and crypto that caused it to react more violently than other markets. But again, maybe just adding one more thing, as we know, due to the nature of crypto being, Bitcoin and crypto being a 24/7 market with deep liquidity, it's often the place that reacts first to any type of news and reacts most violently because it's the asset that people can trade very easily.
Yeah, definitely. Yeah, and we can get into perp dexes and stuff, maybe token narratives later. But yeah, so we should probably move on to
all right. So
Mr. Saylor.
Mr. Saylor, of course, buying the dip or indicating as much. It hasn't been confirmed, but he posted as usual on Sunday, like an orange dot or whatever. So the tradition is that he posts the orange dot, and then on Monday at 8 a.m. U.S. time or wherever he is, he announces the actual purchase. So as usually, he posted his dot. So purchase should be coming, but I don't know. This leads. Do you want to mention something? You had a question, Tim?
Oh, just did you see the AI slop image that he released over the weekend? The one where he's he's like in a dune buggy on a dune driving. I guess it's orange and stuff like that, and it's just like
okay.
It's kind of endearing now. I have to say, honestly.
Yeah. So okay. So let's just talk about MicroStrategy for a moment because, as people know, I think most people know by this point, MicroStrategy is underwater on its Bitcoin purchases. So they have over 700,000 BTC accumulated at a cost of 54.26 billion. And as of just recently, it's valued at 50.83 billion. So that translates to an unrealized loss of 3.4 billion. Now, so slightly underwater, MicroStrategy. Now, people will point out that this by no means means that MicroStrategy has to start selling their coins. And I believe Saylor has indicated that he won't be doing that. They're not forced to do it. But the point is that MicroStrategy and other digital asset treasury companies are pretty much all underwater. So yeah, we've got Bitmine being, what is it? What was the quote, David? The worst.
Well, so yeah. They were as of last week, they were down about $9 billion in unrealized losses. Which is, quote, the worst capital loss in human history.
Okay. Now that's on Ethereum, of course, for the uninitiated. They're not holding Bitcoin.
Now, again, though, those are unrealized losses. And Mr. Tom Lee, he replied to these kind of posts saying, all of these posts dunking on me kind of miss the point of an Ethereum treasury company. We have no debt. We're just holding the Ethereum. We're fine. And Ethereum is the future of finance. Seems unfazed.
Okay, yeah. And so Bitmine is the biggest bar here on the chart. We've got MicroStrategy next, and then 21 Capital. They're 1.6 billion in the hole. Let's see, SharpLink. Metaplanet down 1.2 bill. So all the DATs are underwater. You could actually argue, David, that this may indicate, since these DATs don't have to sell and they're currently underwater, this may indicate that this is actually good buying levels, right? Because if all these institutional players are underwater, they're obviously not going to be selling. They might be, as Michael Saylor is looking to like dollar cost average, that like lower their cost basis here, picking up more coins. And so you could argue that you're getting in at if you buy now, you're getting in at a price that's sort of below what the institutions have purchased at, which means value.
Yeah. Are you talking about buying the underlying or buying the underlying stocks?
But I guess the stocks too. You'd have to look at them one by one to see exactly how they're structured. But I have seen people, bull posting on MSTR here.
Yeah, I again would for just straight up stocks like this. I would always caution buying the underlying. Something like the BMNR though. If it's I don't know how low. How far off the all-time high it is could be more interesting to me, right? Like they partnered with Mr. Beast, right? Yeah. They invested. So I mean, they're making moves to actually kind of generate revenue in some way. To me, that seems more interesting than just buying Bitcoin, which you can do by yourself. So
yeah. Well, I guess my point is just with all these DATs being underwater and the average cost basis of ETF holdings also being higher than the current price, if you're buying Bitcoin now, you're definitely not buying the top.
Yes, that's true. However, Graham, going to our next segment, you could be buying an asset that's going to zero.
All right. So right. Yes, exactly. So this leads us to sort of the sentiment and where we are in the cycle posts. Famed economist Nouriel Roubini issued a scathing essay on his blog, and basically he's dancing on Bitcoin's grave. So we're at the point of the cycle, David, where it's time to cue Bitcoin is dead posts.
Yep.
Nouriel Roubini, he's got some bangers in here. So basically, he calls Trump clueless and venal. Let's see what else. So he links Bitcoin's tumble of more than 40% from its October 2025 high to now, occurring at a time when traditional safe havens like gold soared by 60%. He equates that to a policy agenda dictated by, quote, crypto grifters and a president who fails to grasp the basics of finance. And he dismissed the Genius Act as, quote, the Reckless Idiot Act, arguing that it sets the stage for a return to the unstable free banking era of the 19th century. This is kind of interesting. You'd have to dig into his argument very carefully, but basically he's saying by allowing stablecoins to operate without the oversight of narrow banks or access to a lender of last resort, he's warning that the administration has created a, quote, ticking time bomb. And then just to finish this off, he says, all it would take to incite a panic and trigger a bank run is for a few bad apples in pseudo-libertarian U.S. states to misinvest their holdings or place their deposits in weak institutions like Silicon Valley Bank. I don't know. I do know that it's almost certain at this point, if you look into Silicon Valley Bank, what happened there, for those who don't remember, about 2 years ago now, Silicon Valley Bank was there was a run on the bank. This was the bank that a lot of Silicon Valley startups and people adjacent to crypto were using as their bank. And it was basically in the fallout of the FTX debacle. It's seeming increasingly clear that it was unlawfully taken down by Elizabeth Warren and the anti-crypto army. It wasn't really actually in trouble, but they just forced the bank to close, basically to try to kill the industry. And so I don't know. It's just with Nouriel Roubini mentioning it as an example, it just seems a bit what's the word? It's a bit rich. Actually, disingenuous. That's not quite disingenuous. It's not exactly what happened here with Silicon Valley Bank. That bank didn't fail for organic reasons.
Yeah, absolutely. So that was good. Always nice to hear these kinds of articles. Actually, not ironically, it's good to hear these kinds of things. like you mentioned, I think in Token Narratives last week, you said you're just kind of relieved. You're relieved to have the price crash and to be like, okay, we're in a bear cycle here. This feels good. So on that note, actually, is this FT article that came out recently, and articles like this are legitimately great, right? Kind of sensationalist on the downside, right? So Bitcoin is still about $69,000 too high. FT opinion piece, 1 million views so far on X. And this is your classic traditional finance magazine newspaper making a bold proclamation to mark the bottom. And lots of people on my timeline
over cycles. Yeah.
Yeah. And lots of people on my timeline are celebrating this legitimately, like, oh, thank God, this is great. Well, bottom signal. Here we go. And it's just you don't even have to read it. It's basically like crypto rage bait, I feel like. But it's basically saying that Bitcoin is worthless, and see the number has gone down, which tells you that it's worthless and is just a grift, and is associated with grifters. So
I like this comment.
Financial Times.
I like this comment. It's so brave of you to publicly come out as retarded in a paywalled article no one will read.
That's awesome. That's so good. Oh man. There was like an actual like Omid Malikon. He replied to the lady who wrote this and said, excuse me, ma'am, you have been wrong about Bitcoin for many years over many articles. At what point do you have criteria to kind of invalidate or show that you have been wrong this whole time? She has not replied yet to that actually constructive comment.
All right, so let's move on to a few things outside of the Bitcoin realm. A bit of news in Ethereum land with Vitalik coming out with some interesting comments.
Yeah, this is great. I love this. This is on my. I'm beating the drum. You know, I've been beating the drum, Graham, of the Ethereum comeback, and Vitalik had a couple great posts last week. The first is what this article is about, is basically kind of admitting that the Ethereum roadmap was wrong or flawed, and kind of charting a course for a new, better direction. So basically, he said that the way Ethereum was trying to scale by relying on L2s to basically become kind of the execution layer of Ethereum itself was wrong, and it didn't work. And anybody who's been in crypto knows this, right? You saw a proliferation of L2s, right? General purpose L2s that really didn't, they were just kind of glorified side chains with trusted bridges. And they were so-called like parasitic to Ethereum itself.
They certainly didn't accrue value back to the main chain.
Yeah, but they were like the worst of both worlds, right? So they were not trustless. They didn't increase the kind of the strength and decentralization of Ethereum, right? So they didn't extend Ethereum in any way. And they actively took money, they took value from Ethereum itself, which was trying to be this kind of like trustless world computer. So it was not a good thing. Anyway, everybody knew this. Solana has been dunking on Ethereum for years, basically saying this. And last year, and you saw this last year, they made a course correction. They started scaling the L1. This post is basically just directly saying this, like, hey, we were wrong. We're scaling the L1 now. Ethereum base layer is going to be more performant in the future. And instead of generalized L2s, which have been demonstrably have been a failure, instead we want L2s to be to have like very particular use cases, right? So maybe you have a perp dex that's an L2, or you are a privacy L2 or something like that. And that's what L2s will be used for, because we already can tell that relying on L2s to be an extension of Ethereum itself has not happened. So it's good to hear this. And like pretty much, I think everybody, the comments were generally positive. Even like people in Solana, like Mert, were kind of gracious. They're like, "Oh, thank you for saying this, publicly and so directly." There were a couple comments, like I think Laura Shin of the Unchained Podcast Network. She was like, "This is good, but the only thing that's weird to me is, why did it take you so long to say this?" And I mean, that's a fair criticism, I suppose.
Yeah. Well, it is good. And to me, what this sort of signifies, or is another example of, is that it's a key advantage that Ethereum has, having Vitalik as its sort of spokesperson, is that he can come out and say something and drive the narrative, control the narrative. So here he's like, okay, finally he's controlling the narrative. They haven't done anything really yet, but they're going to, right? So the narrative is, we're going to do this thing. And another example of that is Ethereum and Vitalik's reaction to the quantum FUD, right? So they recently came out and said, okay,
exactly,
we're going to throw some money at it. We were setting up a task force. So the market then is like, yeah, okay, Ethereum is doing something for to face the quantum threat. Meanwhile, in Bitcoin, because there is no, like, Satoshi's gone, there's no like widely accepted head of Bitcoin. And for better or worse, that means that it's hard for Bitcoin to get ahead of the narrative, and thus Bitcoin continues to sort of, people have questions about Bitcoin's response to the quantum threat. And all it would take is, like, again, Ethereum hasn't really actually done anything to fix the quantum threat. I mean, they've like said they're going to do something, and they've thrown some money at it, but that's all it really takes to shift the narrative, in my opinion, is just like a few key people making statements.
Yeah, I agree. Now, I don't know, did you see the last week's chopping block where Tarun was talking about this quantum stuff, and he said there was a pretty big turning point for him in terms of believing the quantum threat. He personally, like you, Graham, doesn't think it's really a threat, but he was saying that the thing for him was when Novogratz from Galaxy was talking about it, and how some of their like LPs or something like that liquidated their Bitcoin because they believed that quantum was a threat. And so Tarun was basically saying, like, I might not think it's a threat, but people with money and in TradFi and institutions, they think it's a threat. And so then something has to be done. And they, and Haseeb and all of them, they were talking about, yes, put a couple $1 million at it, make a checkbox so you can say, I've done my due diligence, and it's
exactly.
it's on the roadmap. So at the very least, that is important to mollify people.
Now, of course, it's harder for Bitcoin to do that, having no head. And that's why I mentioned it's the advantage, a key advantage, I think, of Ethereum, is having Vitalik be the one that anyone can point to, and he can just say, like, yeah, we got it under control. Not so exactly. Not the case with Bitcoin, or much harder for it to be the case, for better or for worse. All right, let's just wrap this up with one last little story here, David, which is Polymarket, everyone's favorite prediction market, seemingly leaning towards, surprise, surprise, issuing a token. And this is conjecture at this point, but basically it comes from the fact that there's a trademark filing on the word Poly, or the ticker Poly. So people speculating that will mean Polymarket issues a token.
What would you think that this would be for, Graham? Why would they? Let's imagine that they do it, but why? What's the? I feel like we've gone through this token arc, and everyone kind of realizes or agrees that you don't need a token.
Yeah.
Exactly.
Usually. Unless, I mean, there's a few cases where it's like it basically needs to be equity. The token needs to be equity, and we can't. That isn't possible yet with the regulatory structure. So I don't know, what is it? Yeah, it's a down only rewards token or something, or government. I don't know.
Yeah.
So
exactly.
Yeah.
By the way, on Polymarket, did you see that? Since we're just talking about this, did you see their marketing stunt last week? I posted about it.
Yeah,
I
it was
commented
good.
on it.
It was good. Can you explain it?
So Polymarket, they created a pop-up grocery store in downtown New York City. So Mom Dami and all of them Dims are making like government-run grocery stores, I guess. This is like a thing they're doing in New York now. And so I guess Polymarket wanted to show their solidarity with this, or I have no idea. Anyway, so they made a pop-up grocery store where the groceries were free. I don't know how that worked. I obviously this wasn't permanent. It was like a short-run thing, but lots of people lined up, I guess, to get free food. It's kind of dystopian to me, to be honest.
What was your comment, David? Show me your marketing team has money to burn.
Tell me your marketing department just got a shit ton of money and doesn't know what to do with it without telling me.
Yeah, and then it's the pop-up Polymarket market.
And the slogan is like bizarre. Like free groceries, free markets.
Okay.
Yeah. Free groceries. Yeah, you know what that puts me in the mood for? I when I have to have free food, then I've got freedom. All right, buddy. Anyway, so it was just
I
mean, I guess it worked.
I guess I'll take the money I would have spent buying groceries and instead gamble it on a Polymarket, on a prediction market.
But I mean,
but
Graham, I mean, maybe I'm a boomer or something, but like, I remember the days when corporations were giving away like Lamborghinis and airplanes and travel to like exotic locations. Now so they're giving away free groceries. They're giving away groceries, and people are, free groceries. What are we doing? What are we doing?
Yeah. It's unclear.
Man.
It's unclear what we're doing.
That's dark to me. Anyway.
All right, David. I'll let you go. You've got some big interviews lined up here.
Yes.
At Consensus Week in Hong Kong. Looking forward to seeing those coming out in our channels, and also to discussing with you whatever insights you get. You're going to be. I won't
Don't spoil
it. I won't spoil your stunts that you've got lined up. I'm excited to see those.
Yeah. It's going to be fun.
All right, David. Thanks for joining, and thanks everyone for listening, and have a great week.